Let me explain to you the expected market moves for this week. Today, 17th of October, this is the third week of October. The monthly trending moves are expected to happen. But still, this being the beginning of the fourth quarter, they are expected to make some big volatile moves and accumulate positions. What they do is they quickly drop the market and accumulate the position, quickly gain the levels and book profit, and again drop the market and accumulate buy position, quickly rise the market, book profit. Then they do 2-3 times like that, a circular trades of about 100-150 pips. In such a situation, what happens? They gain adequate profit. And once they gain adequate profit for the quarter, then they start buying at a higher level and rise the market. So what happens with the profit gained, even though they make a higher level buy, the average will be still much lower than that of the market price. So that at any given time, they can exit out of the market the event there is a knee-jerk reaction happens in the world. Suppose somebody suddenly dies, then you find the market collapse. In such a situation, they will not be incurring huge loss. They will be able to exit out of the positions, and then still they will be in the money, taking into consideration the average profit they have done it with the help of the circular trades. So you have to understand why they are taking such a long time to do the wide range swings in the market before making any big upward or the downward move. And also another important factor, namely the US elections. Normally during that of the US election time, the players used to book profit and stay in the money, and they will sit in on cash, and they don't invest much because they want to find out who is going to be elected and negotiate and find that they are not caught vulnerably for the insider trading, and then subsequently they go in for the big moves in the market. So ultimately we need to understand it is a man-made market, and it is a perfect understanding of the manipulators with that of the government. They are able to make big moves in the market, and they may give various other attributes. They may say that it is because of the economic conditions, it is because of the data, etc. All such things are all nothing but the attributes. But ultimately, why the players make investment in the market is to make big money out of making huge investments, because such trillions and trillions of dollars, no bank will be in a position to accept and take as fixed deposit and give an assured interest return. So the only possibility is they can take it in the private arm of the bank and deploy it in various markets, and then enter and exit from various market. Thereby they are able to make huge profit for such investments, and also they are able to flow to the market. In the process, what happens? The banks also earn huge money. And if you think that doing the transactions for us, the bank is earning money, it is not so. Suppose you make a deposit and withdraw money, the bank is only extending a service, and they are not really making big profit out of that. Probably they can put the money in the call market, etc., but that will give only a meager profit. So what is more profitable for them is market manipulations. So in all the markets you come across, the banks going for such manipulations with the help of the operators, and thereby they are able to make surprise moves and create uncertainty and trap the traders. So we need to understand how exactly the players are going to make the moves. The forecast says that. Now today they are expected to make the swing and rise moves in the case of Euro and GBP, and tomorrow also they are expected to make either way moves, rise during the Japanese session and slide during European and rise during US session. And then you find that Wednesday FOMC minutes, FOMC decisions are to be taken, interest rate decision and the statements, and people might say hawkish, dovish, all sorts of things, and ultimately what the players are expected to make the move, swing and slide before that of the by start of the day, and firm up a little bit during the European session and drop before and after that of the FOMC. Then in such a situation, people might think that market is going to be very bearish. After gaining the levels for 2 days, they are expected to drop on Wednesday. Then immediately people might think that market, we have to do sell and buy trade. But the players make a dip during that of the 20th Thursday and gain the level and drop during that of the BOE interest rate decision again, and then start gaining the level during US session as a surprise trap. Then they are expected to make the swing and slide on Friday to induce the long holders to liquidate the long position and start rising during that of the European and US session. So whether you take a buy position or you take a sell position and wait for some time, the players will show the loss for us. So we have to quickly grab the profit when profit is seen. There comes our skill set. Then next week, it's the 4th week of the month of October. They are expected to make the monthly trend reversal, trending move on the upside, but they will not make a straight upward move. This being the last quarter, they will make volatile move, but the upward might be there for a day or two and then reverse quickly, then again make upward move. That sort of moves they are expected to make during this particular month. After the US elections, once the results are out, we'll be able to see a surprise upward move in the case of Euro and GBP. And you might think that after the US election, the envisaged person has become the president of the United States. Then US dollar is expected to be very strong. But the players use the US dollar to buy all other currencies and rig them and gain very big. And simply they will say it is risk appetite. So this is how they are going to give the interpretations to that of the various moves they are going to do in the market.